we're in such a weird space. The economy is growing pretty strong, and you've got a Fed that broadly said we think the economy is going to be a little stronger and inflation is going to be a little higher, but we think we should be cutting rates.
That one line from Mike Novogratz captures the paradox of 2025 perfectly. Growth, inflation, and rate cuts all happening at once.
That's why gold is at the all-time high. Bitcoin's at the all-time high. It's a funny world out there. There's a president who is just dead set on picking a Fed chair that wants to cut rates. There's a huge amount of debt that needs to get financed, and so lower the financing cost helps with the deficit.
Although they kind of lose the control of the long end doing that. Well, Japan certainly has, hasn't it?
Japan certainly has. The U.S. is actually the flattest curve of the three.
Yeah.
What he's talking about here is the new macro regime, an economy that refuses to slow down even as debt piles up. The Fed wants to ease financial conditions, but that's exactly what keeps gold, Bitcoin, and risk assets near record highs.
They're issuing a lot of bills, not a lot of long end. And at one point, that ratio's got to shift, or it doesn't. And so every single person I know is nervous. And it's funny that, macro, you've made money this year if you just stayed in the trades. Beginning of the year, you say, got to be long gold, long silver, long commodities, long the curve, and probably long stocks. And guess what? Oh, and short the dollar. Every one of those trades is works.
When politics start shaping monetary policy, you get a strange cocktail. Strong GDP, but a weakening currency. That's why Novogratz says gold and Bitcoin are at all-time highs. It's not speculation. It's insurance against policy confusion.
So you look at a company like Bridgewater, who are too big to move. Ben Meltman over there right now, they're up 26%. Ben would have traded himself into a paper bag with all the Trump stuff, but that whole group.
Ben's at Bridgewater now?
Ben's at Bridgewater. He's the deputy CIO. He's got a big job.
Wow, I didn't know that.
What a perfect place for a guy that calls him well and might overtrade him. If you can't overtrade, it's been a pretty easy. Most of my other macro friends, their performance is anywhere from flat to up single digits in one of the great macro years because all the Trump stuff with the tariffs, with the slow, has just shaken people out of what were their predictions early on.
That's something every trader needs to notice. When everything works, risk is high. Consensus trades make people comfortable right before volatility returns.
And also, Scott, who you know as well, has made it pretty clear what they want to do. They've just basically said, he's basically said, I want a weaker dollar. I want to get rates down because I need to refinance the debt, which is a rare thing for them to actually admit what they're doing.
What he's talking about here is the new macro regime, an economy that refuses to slow down even as debt piles up. The Fed wants to ease financial conditions, but that's exactly what keeps gold, Bitcoin, and risk assets near record highs.
And we're going to jam the bills in the meantime, and they're kind of debasing the currency. And he's made it very clear what the trade is, and people just got freaked out by all of the political stuff.
Yeah. And listen, we're a very strange time politically in our country, right? The administration, I went to the inauguration, and in the big inaugural ball where everyone was there, the president said, guys, we're going to do more in 100 days than any administration's done in 4 years. And we're going to just hit them and hit them and hit them and hit them. And that's exactly what they've done. They are moving at lightning speed on so many fronts that the opposition doesn't know what to do, but the markets feel like it in chaos.
This part is key. It's not about the Fed. It's political now. Lower rates aren't about stimulating growth anymore. They are about managing the U.S. debt load.
I mean, the downside of it is you are undermining a lot of the great institutions in America. If it's the military or the Department of Justice or the Fed or the FBI. And some of that needed to be cleaned out, but you are now really, I think, not cutting out the scar like the virus is, you're cutting through the bone. And that's scary. And I think the market doesn't like that. And the polls don't like that. And so we'll see what, when you run into midterms.
When liquidity flows and policy shifts align, it's the perfect storm for risk assets. But as Novogratz warns, this same volatility is shaking out smaller macro funds. Emotional trades do not survive high volatility years.
And the other thing is, growth is weird as well because we've got like capex growth because of the data centers, which we'll come on to, is exploding. So we've got the fixed asset investment side going up, but Main Street is pretty dead because of rates. So I can see this kind of dichotomy they've got going on.
I was out to dinner last night with it was a group dinner, but one of Scott's top lieutenants was there, and it was interesting. They see the same thing. They're like, growth is fine. A lot of capex, not just the data center, but capex across the board. But unemployment, but the labor statistics are harder to also get your arms around because you're pushing all the foreigners out, right? All the immigrants out. And so like in construction, were they on record or not on record? Messy numbers, but it certainly feels like you've got softness in the labor market. That's why they want to cut rates. But you got a pretty strong economy, right? And the second quarter was really strong and the third quarter looked pretty strong. And so it's a very, in some ways it's a long equities, long gold, long risk asset market.
When politics starts shaping monetary policy, you get a strange cocktail. Strong GDP, but a weakening currency. That's why Novogratz says gold and Bitcoin are at all-time highs. It's not speculation. It's insurance against policy confusion.
That's right. It seems pretty clear from that, and I don't see many major risks on the horizon yet.
Well, the only question is it's become so consensus that, you saw Paul Jones went on TV yesterday, and I love Paul, and he was like, that's it, we're going to melt up into year end, right? Sometimes those calls become, the great butt of jokes later on in life. You're like, the great thing about Paul, he'll say it and he'll be stopped out by tomorrow.
I know. You never listen to anything he says, as you know. He's got a 3-second time horizon on everything he does. It's like,
well, he is often, the most disciplined guy I know. And that's why I think he's 35 years of trading, and 1 year in his own account, he was down like 72 basis points in 35 years. Like, that's discipline. Don't lose your money, you get rich, right? It's shocking how many people have a few good years and they're like, oh, I had that one down 30. And I was like, what? And one down 30 takes a 45 just to get back to break even, right? And so your Sharpe ratio, one bad year crushes your Sharpe ratio.
Politics, debt, and liquidity. When all three collide, traders need to stop thinking short-term and start looking at the bigger macro picture. If you enjoyed these breakdowns, make sure that you subscribe and smash the like button. I'll see you on the next one, guys. Thanks for watching.